vacancy rates rising in some of these pockets where the rents were soaring through at 10-15% and now coming back to like 3-4-5%. And that's also a strong indication that the market is cooling off and people are coming out. For investors who have bought in Perth and who are chasing what I call it is short to medium term growth for 2 to 4 years, I think this is the time for you to cash out, come out and try different markets, right? A lot of people think about property as, okay, I'm going to buy and hold it forever. You can see that holding forever in Perth is not going to get you the best returns, right? You would rather come out at a safe price point, pay a bit of tax, and use that to invest into opportunities like Brisbane or Sydney or somewhere else, right? Where the market is now going to take off and go even more harder, right? So yeah, it's always about change in asset class. Co-living properties can generate almost $140,000 in passive income and net of $40,000 in passive income after mortgage repayments, and they sit in an average yield of about 10%. Hello and welcome to another episode of Help Me Buy Property podcast. In this episode today, we are going to discuss the current market update, the prediction secrets for the month, and we are going to talk in a lot more detail about where is the market heading in 2025. Now, in order to share all the insights, I have our resident data guru, Mr. John Lindeman here today, who would be co-host. John, how are you today?
I'm very well, Moss, and it's great to be part of your program. I'm really looking forward to it.
And it's exciting. I think the last episode that we did today together was amazing. There was a lot of feedback. There was a lot of questions. There was a lot of insightful conversations that we've had. So I know that you are sharing your predictions for today. So give the users and the listeners a bit of insights about, okay, what are we going to discuss today and how is the show going to look like for today?
Okay, definitely I'll do that. And before I do, this is what I'll be covering in the presentation. So I'll be looking at the national property market, doing an update of what's actually going on in every capital city around Australia. And then I'll give you my state and capital city forecasts. These come from our patented database. It's the only patented database in Australia that does property market predictions. So you'll see how that works and what the forecasts are. And then I'm going to, as you suggested, Moss, reveal the hottest places to look out for in 2025. So I'm going to explain how I've come to those conclusions and where they are.
Amazing. And for viewers and listeners, we are going to do this monthly. So we would have John coming up on the show on a monthly basis, talking about where the market is heading, where are we pivoting, and what are the key things to look out for every month. So let's start off with the national housing market update, John.
Okay, we'll do that. And first of all, I have to give you my disclaimer.
The honest disclaimer, yes.
Yes. So this is general information. We don't claim or intend to provide financial or personal investment advice and recommend that you obtain financial advice specific to your situation before making any financial investment or decision based on the information you're about to receive. So it's your responsibility when using our services to make your own individual decisions with regard to your property investments. So having got that out of the way, I'll tell you a little bit about myself, my history. I spent 5 years working with the Bureau of Statistics, studying trend analysis, and I then was head of research at ResX for 5 years, where I put that study into practice in terms of how the housing market operates. And then in 2010, I set up my own company, Property Power Partners. So that's been going for nearly 15 years. I've written 2 books on the property market published by Wiley's. They are both bestsellers, especially the first one was a landmark book because the first time ever, I think, explained how the market works and how investors can get the most benefit. And the first one was in 2010, it was written, but it's still quite relevant even today. I do lots of syndicated columns with people like Alan Kohler, Kevin Turner and Michael Yardney, and I do lots of podcasts and just general information, articles and so on in the property media. I'm the go-to guy for Stuart Siddell's property investing, capital property advisory, the Wealth Club, the Investors Agency, Redmayne, and of course the Investor Partners Group, as you mentioned, Moss. So let's get on with it, the housing market update. And what I've used here is the CoreLogic published data, and this shows you the median value of our capital city property markets. And not surprisingly, Sydney is the most expensive, but rather surprisingly, the second one is Brisbane. So Brisbane is the second dearest capital city in which to buy property. That's followed by Canberra. And when I've done sort of quizzes on this, and no one picks number 3, which is Canberra. They always think it's somewhere else. But then Adelaide, Perth, very close, and Melbourne is in 6th place. So that's a lot lower than most would wish. And then Hobart and Darwin. What I'm going to show you now is the actual change. This is really more relevant. Which way are these markets moving? So this is the annual change over the last year. What's interesting is that the growth has all been concentrated in Brisbane, Adelaide and Perth. So even if you look at the last quarter, you can see that they're the 3 cities that have been doing all the growth. And then if we move to the last month, you can see again that the growth, what's happened here is that the growth is moderated. It's slowed right down, but and Sydney is slightly positive. Melbourne's gone a little tiny bit positive, but these are very low percentages. They're all less than 1%. So the market generally has slowed down quite considerably. Now I'm going to share my state and capital city forecast. So rather than looking at backwards what's been happening, let's look ahead. And the way in which we do that is I use my patented database. There's the innovation patent it received in 2016. And what it does is it gathers property data for all 15,000 suburbs in Australia for all types of residential property. And it gives us a snapshot of past performance for each of those suburbs, the current type of market, the rental yield and cash flow potential, and imminent price growth potential. So it's a very handy tool, especially as it also generates predictions up to 5 years into the future. Nothing else can do that. There's no forecasting tool in Australia that can do that. But of course, the question is, well, how accurate is it? It's not much good if it's not accurate. And yes, so Moss, we've analysed the accuracy since we started doing this in 2010, so nearly 15 years, and we've established an accuracy rate of over 90%, both in terms of price and rent movement. And that's not just the forecasting the direction, but also the intensity of change. So
it's amazing.
It's a very useful tool, and it enables me to make predictions like this. So these are published predictions. I made this in Your Investment Property. In August 2020, I said the lower price suburbs in Adelaide were set to boom, and house prices in those locations, such as Salisbury and Elizabeth, have trebled in price. That's in less than 5 years. Now, that's not because I'm clever, but it's because the database is, and it's the tool that does the work. And the same with Perth. Again, in August 22, I published a newsletter saying that Perth's bargain price suburbs were about to soar, and they've doubled in less than 2 years. And that's in the Rockingham, Mandurah, those lower priced areas.
Don't get yourself taken on a ride by property spookers, so-called property investment advisors, or buyer's agents who are selling house and land packages or off-the-plan properties or apartments. Get yourself copy of this book called The Millennial's Guide to Property Investing. This book is not just for millennials. The title suggests, but it's actually the most advanced way of investing in property. This book will relate to your clients, your colleagues, and other business owners. There are so many property spookers out there who have come out of the woodwork over the last 3 to 5 years, and there is so much misinformation out there that I had to write a book about all the F-ups that people can actually avoid in order to be super successful in the property investment journey. Some of these are really easy to identify, but they are so costly to fix once these mistakes are made. So it's a short book, it's easy to read, it has a lot of stories, it has a lot of examples, and it is a true guide for people who wants to do it themselves. My name is Moxin Reza. This is my story, and a lot of you will relate to parts of this story if you're not born in the riches and if you're trying to build a property portfolio that can last generations and help you improve your lifestyle along the way. So I give you a chance to come out there and have a read. Be kind, stay safe, keep smiling, keep investing, and please do check out the book.
When you really think about these, don't follow property prophets, but don't follow property gurus, right? Follow the data, because data is what gives you enough evidence to take you in the direction, right? So I totally understand and respect that. When we first started investing in 2018, 19, that was very similar trends that we were looking at. I still remember being on the Perth flight in 2021 and having some intense conversations with some local agents saying, hey, you would see the investor influx here in Perth, which they've never seen since 2015, right? And so data tells the story, and those who follow data religiously could never go wrong. But more importantly, data can tell any story, right? Us data analysts would understand and realize that you can show and tell whatever story you want with data.
So how does this work? Well, we look at all 15,000 suburbs, houses and units, and we read the current type of market. So we look at, this is the 5 indicators we use. So we say it's either in strong growth, moderate, balanced, moderate falls, heavy falls. What does that mean? It means that right now, if it's a strong growth market, it means prices are going up by more than 10%. And if it's heavy falls, that's the black one on the right, it means that prices are falling by more than 10%. And then all the others are somewhere in between. Balance obviously means no change. But then it does the prediction. So it says, well, what's likely to happen, say, over the next year? Will there be strong growth, moderate growth, will be balanced, moderate falls or heavy falls? And we do that for every single suburb in Australia. And then we forecast out longer, so as I mentioned, up to 5 years into the future, and every suburb. So when we do that, what we can do, Moss, is we can look at an entire city. We can say, well, let's look at it. This is a typical city I've made up. It's not a real city, but just to show you how it works. If we gathered up all the suburbs, their performance in that city, and let's say nearly half of them were experiencing strong price falls or heavy falls, that would show you a huge black wedge like that. And if a year from now that had changed so that nearly the same numbers of suburbs are in growth as in decline, it would look something like that. And then in 3 years from now, if it was going, the prediction was going to say strong growth for nearly half of the suburbs, it would look like that. So when you look at these pie charts, which I'm about to show you, all you have to really look for is is a lot of red or a lot of black, and which way is the colours moving, because that'll tell you what's about to happen. So let's look at Sydney. So this, according to our database, looking at all the hundreds of suburbs in Sydney, you can see there's a few that are experiencing strong growth, not very many, but about a third, just over a third of Sydney's suburbs are in growth right now, whereas there's quite a few with no growth and some with falls. But when we look forward, the database is saying, but a year from now, it's actually going to be a bit better. So about half of Sydney's suburbs will be in moderate growth, some in strong growth. And when we go ahead 3 years from now, you can see that that situation is improving again. So what we're saying is that Sydney's market performance will improve over the next few years.
Yeah.
Looking at Melbourne.
Now, one
yes,
thing
Moss?
that I do want to call out very quickly is for people who are listening to the podcast on Spotify, it would be great for you to jump on our YouTube channel and watch while you're listening, because there are some interesting slide shares that we are doing. So it's okay to listen to some of these things, and there's a lot of value in listening, but it's also important to view some of these charts that we are talking through today. Now,
Indeed.
can we take a very quick pause, John, and if I can ask some questions in relation to Sydney?
Yes,
When
of
you were
course.
talking about Sydney per se, where Sydney is showing small signs of growth versus where it's hitting, say, in 3 years from now, knowing where the price point of Sydney is and the concentration of growth that happens predominantly in only a handful of pockets, is it fair to say that it's those pockets that where the growth is coming up right now is the pockets that would be growing over the last 3 years, or is it just scattered growth over the Sydney?
That's a very good question. Thank you for asking that. What we're seeing in Sydney is that all the growth is concentrated at the low end of the market. That is the first home buyer suburbs. They're the ones where the growth is starting to build up. The top end of the market is experiencing no growth at all.
Yeah.
And you'll notice this is going to be very different for every capital city, as you'll see in a minute. So yes, there's some growth occurring, more predicted in 3 years from now, pretty much all in that the first home buyer and investor type market. When we look at Melbourne, we look at the performance right now, there's no red. In other words, there's no suburbs with strong growth in Melbourne at all right now. There are some with moderate growth, but quite a few that with also moderate falls. So what's going to occur over the next year? You can see now we see a little bit of red, which means that some suburbs will be experiencing strong growth about a year from now. And not many, but still about a quarter of Melbourne suburbs will be in growth. And again, Moss, they will be all the first home buyer suburbs where the growth will start to build up in those outer suburban areas of Pakenham, Cranbourne, Melton, those sorts of locations, first home buyer locations, but also some of the inner western suburbs, the investor type locations where rent demand is increasing dramatically. So we're seeing growth potential there, and that will increase over the next 3 years as well. So you can see that in Melbourne, it's going to be very important to pick the right areas because there's not a lot of growth suburbs here. Very important.
And it's a very consistent story. I think all the growth that you're seeing, and similar to what happened to Adelaide and Brisbane over the last sort of 4 years as well, it's the affordable price points that saw the massive amount of growth, right? And so you're talking about price points that are sub 600s, be it metro, be it regional, where there is a lot of owner-occupier activity, are the suburbs which would see some growth coming through these areas, right? You know, again, people look at the city and they think that the whole city performs in the same direction. And I remember you saying this previously as well, 15,000 suburbs and 15,000 markets in Australia, right? So you need to be very careful about which market and which suburb are you picking up, because it could be possible that the neighboring suburb is not rising and that suburb is the only suburb that is taking the leaderboard shine.
Yeah, exactly. So we'll move on to Brisbane, which is, as you can see, there's about a quarter of that pie chart is coloured in red because a quarter of Brisbane suburbs are booming right now. And a year ago, it was actually more. There was more red, so it's come back a bit. But when we look at the future, you can see it's picking up again. And so we're seeing there's no black, which means no suburbs suffering from heavy price falls a year from now. About a third of Brisbane suburbs will be in strong growth, and well over half will be in growth. And then if we go 3 years from now, you can see that it's pretty much the same picture. So well over half of Brisbane suburbs will be in growth, and well over a quarter will be in strong growth. The difference here, Moss, is that these suburbs are not the first home buyer suburbs. That all occurred, as you said, 3 years ago. That was where all the growth was in the Ipswich, Logan, the outer suburban areas of Brisbane. And now it's very much concentrated in the upper socioeconomic areas. So it's the dearer suburbs where all that price growth is now occurring.
If I compare Brisbane market to Melbourne market, and this is one question that every investor and every owner-occupier have in their head, where when you talk about the population, Melbourne has much bigger population than Brisbane. The average salary in Melbourne is a lot higher than Brisbane. Why is that Brisbane is taking a lot more shine when it comes to growth versus Melbourne?
I think when this boom started in Brisbane, Brisbane was medium prices a lot lower than Melbourne, so it was more affordable. A lot more investors came in, but also the sheer volume of people moving into southeast Queensland. So it's the part of Australia with the highest population growth. and the lowest prices. So you saw this combination. Also, the other thing, being a massive shortage of properties meant that the yields were much higher. And so investors were attracted to Brisbane and to those lower priced areas around Logan and those places where you could buy 400,000 property and get 6% yield. And we're getting close to that sort of situation now in Melbourne, although not 400,000, but you can certainly buy a property for 600,000 and the yields are starting to rise. So I think what we're looking at is where Brisbane is now, Melbourne's likely to be in about 2 or 3 years' time.
Yeah, yeah.
So that's a pretty rosy picture for Brisbane. What about Adelaide? Again, you can see that, and Adelaide's got the third highest median prices of any capital city in Australia. And you can see why, because around a third of all the suburbs are currently booming. And the prediction is that that's going to contract. It's still probably well over half of Adelaide suburbs will be in growth, but only about a quarter will be in strong growth. And then it's pulling back a bit 3 years from now. Now, again, these suburbs, the growth potential ones are all the upper socioeconomic areas. So the growth started 3 years ago in those lower Salisbury, Elizabeth type suburbs, and people have upgraded. They've moved, into better homes in better suburbs. And so the growth is moving right through the market and is now very much firmly in the upper priced suburbs of Adelaide.
Yeah. And it's interesting that when you talk about Adelaide and Brisbane comparison as well, a lot of the higher price point suburbs, the data that we were looking at previously is the distinguished difference between established properties versus brand new properties in those similar locations, right? When you talk about areas like Hectorville or Tranmere, when you talk about the posh of the posh Henley Beach of Adelaide, all of these are landlocked. So there is not a lot of land available in these pockets in these areas, right? And so even if you buy an empty land, because that land price has gone up and the build prices are significantly through the roof, you see a massive difference between established properties versus brand new properties. And so there is almost like a difference of 35 to 40% in certain pockets and certain areas. So I understand why the data would predict that there would be higher growth in some of these higher echelon suburb. Is predominantly because established properties are so much more cheaper than brand new properties, and people would default to, hey, if I have a really nice looking established property, I would rather buy that than pay a 40% premium to build a brand new property. So it's a very interesting market. Having said that, also that Adelaide has always given consistent growth. Like you look at over the last 10 years, Adelaide is one of those areas where you never see prices dropping by like 5% or 10%. You would always see like consistent 3-4% growth every year. It was only over the last sort of 4 or 5 years where Adelaide has what I call it is the reverse correction of the pricing, where it should be here rather than where it used to be. And so seeing that 3 years from now, the market is basically maturing, going towards what I call it is typically mature growth, is what usually the markets would do, right? So it's very interesting.
It is. And now we look at Perth, and it's pretty much identical to Adelaide, the same performance, nothing really going backwards very much. About well over half of Perth suburbs are in growth right now. When we look at the year from now, there's quite a contraction, but that's because, again, that growth is now being concentrated or will be concentrated in those upper socioeconomic areas. And 3 years from now, pretty much, again, it's about half of Perth suburbs will be in growth, not many in strong growth, but certainly about half will still be going up in price. And I've had a lot of people saying to me, oh, look, there's been way too much investment in Perth. The market's going to crash. It's overcooked. And yet when we look at the data and we look at the numbers, no, it's fine. And the key to this is there's a massive property market shortage. There's a shortage of housing in Perth. When we look at the rental vacancy rates, they're really low, and the number of rental vacancies is declining. So there's no way that Perth is going to crash. It's just simply going to slow down, which is probably a good thing, and let everyone sort of take a breather, but it's certainly not in danger.
I think it's so interesting. The data indications were pretty much that this is the final year for growth for Perth. the top end of the growth, right? The chunky growth. Yes, the growth would continue. I truly believe that the market is not going to tank like 2015 or 2000. You would never see those prices plummeting because this is what a new normal looks like for Perth. But there would be some sort of a contraction because investors are coming out of these markets and now it's owner occupiers with emotions driving the prices.
Yes.
And so you're seeing some of those corrections coming through in some of these areas, and also the rental pressures easing up as well. I can see vacancy rates rising in some of these pockets where the rents were soaring through at 10-15% and now coming back to like 3-4-5%. And that's also a strong indication that the market is cooling off and people are coming out. For investors who have bought in Perth and who are chasing what I call it is short to medium term growth for 2 to 4 years, I think this is the time for you to cash out, come out and try different markets, right? A lot of people think about property as, okay, I'm going to buy and hold it forever. You can see that holding forever in Perth is not going to get you the best returns, right? You would rather come out at a safe price point, pay a bit of tax, and use that to invest into opportunities like Brisbane or Sydney or somewhere else, right? Where the market is now going to take off and go even more harder, right? So yeah. It's always about change in asset class.
It certainly, we always believe timing is far better than just simply time in the market.
Yes.
Because if you spend enough time in the market, you'll only get the average growth, which is 7% per annum over time. That's it. Now I'm going to give you my boom predictions.
Whoa, this is the interesting bit. I think this is what everyone has been waiting for. So,
so what I'm going to concentrate on every month as we do this, I'll look at different types of markets and where the potential is. But I thought I'd share this is really quite interesting and very typical, because when you look at that, this is the annual change in prices. Brisbane, Adelaide and Perth have all been leading, and strong growth in those three cities. And as you mentioned, Moss, that most of that growth is now translating into owner-occupiers, people upgrading and moving into better suburbs, bigger homes and so on. So that's sort of pretty much running its course in those three cities. And when we look at the growth at the top end, so Brisbane, Tenerife, 4 million, Pullenvale, 2.2, and so on, and Adelaide and Perth. But over on the right, that's the annual change in price. So suddenly they've gone up by 20, 30, in some cases even more than 50% in the last year. So the growth has all come to the top end of the market. And who owns properties in those suburbs? It's older people. They haven't got any mortgage left anymore. And so they are now motivated to sell their properties and to downsize. So what we're seeing is that movement already starting. And if you look at these, this is the regional markets from CoreLogic. And what we show you there is the past month, 3 months, past 12 months growth, and which of the three states leading heavily: WA, South Australia and Queensland. You can see WA is in front there, and then followed South Australia and Queensland. Now, what's going on here is that these are specific locations where these people, older people, are downsizing to. And one of the reasons they do that is because the government encourages them by allowing them to put up to $600,000 from the sale of the old family home into their super tax-free. So there's a huge incentive for people to do that. So there they are celebrating. They've sold their home in Perth, Adelaide or Brisbane, cashed up buyers. Where are they moving? And here's the logic behind this, right? 1/3 of our population is age 55 and over. They own these empty nests without remaining debt. The value of their homes has more than doubled in the last 5 or 6 years. There's the government incentives at $600,000 for a couple to downsize. And they're keen on this strategy because everyone that does this becomes a self-funded retiree. So the government doesn't have to pay the pension to these people. So they're actually encouraging people to do that. So you've got high price growth potential with low risk. And these are also holiday and tourist destinations, and they're sought by discretionary buyers. People want a holiday home, those sorts of buyers as well. So they tick all the boxes. And there's massive road infrastructure projects underway in the areas which I'm going to show you. So there's the logic. Potential retiree, sell the family home for 2 million to 2.5 mil. They put 600 into superannuation, keep 400,000 for a nest egg and legacy. And that means they can buy a home in the right area for anything between 1 million to 1.5. So there's your price ceiling. This is what these areas can go up to over the next few years. They probably won't go up much more than that, but they can have the potential to go up to those prices. And where are they? Well, one is around Brisbane, regional markets around Brisbane, around Adelaide and around Perth, because they're the three capital cities where all this growth has moved into the market. Busselton is the first one. Now, it's already happening in Busselton. Most prices have gone up over 20% in the last year. It's got an airport which services Melbourne and Sydney, and it's a beautiful place with a lot of everything that older people would need, as well as a very attractive holiday and retiree area. The next one is the Fleurieu Peninsula in South Australia, which again is just south of Adelaide. It's not far for people to drive to see the kids, grandkids, 55,000 population. There it is there. Beautiful outlook and coastline. It's got a big town, Victor Harbour, and other big towns as well. And it's a popular holiday and tourist location as well. And the third one I wanted to share with you is Hervey Bay. Interestingly, it's got the biggest population, and it's only about 3.5 hour drive north of Brisbane, but it's got serviced by the duplicated Bruce Highway, very easy to get to, and there's Fraser Island, which is a popular holiday and tourist destination as well. Now you might say, but hang on, wasn't it battered by this thing here, the ex-cyclone?
Yes,
Alfred. It was. Yeah, and I've spoken with a lot of real estate agents since that happened, and they say, yes, there was minor flood damage here and there and water damage, but the beauty of this is that whereas in Busselton the growth has already kicked off, in Fleurieu it's about to, here it's going to probably delay things by a few months, and it's a great time to jump in and secure a property in an area like, now Hervey Bay's got about 10 different suburbs, so you would need to know which one and what type of property to buy. But there's a great opportunity there because the demand has slackened right off while the supply hasn't. So there you go. You could buy in Busselton, Fleurieu Peninsula, Hervey Bay for 600,000 to 800,000, and then sell for anything up to 1.5 mil. So you could double your money in 3 to 5 years by buying in one of those locations.
And be mindful, like again, if you are going out to some of these pockets, some of these suburbs, you might not hit the high yields, right? A lot of people are chasing yields and they're trying to hit 6-7% yields. You might end up in some of these pockets and you might see that the yields are only sitting at 4.5% or maybe top of 5%, right? So understand that you're not looking for cheap rundown houses. You're looking for retiree type houses. You're looking for nice, good looking houses, because those are the ones that are going to go up in prices. If you're going to go for something cheap and dirty, know that you would have to spend some money in renovating this, making it more attractive, because these are cash to buyers, not looking for rundown cottage homes, right? These are people looking for nicer abodes to retire, right? So a lot of people go down these places. Like I know Victor Harbour quite well, and Busselton. I was there in Busselton and Margaret. All of these are beautiful towns, and a lot of investors, because they're trying to be the cheapies, they would go out and get a 70 or 80 square house, like a really small square meter house on a big piece of land, thinking that this is going to grow. If you are targeting downsizers market, you would want to go for bigger houses with smaller lands. I think the dynamic shifts quite significantly. So it's important to know the market fit that you're going after as well in some of these pockets.
Definitely. And there is a way you can increase the yield, and that is by doing short-term rentals run by Airbnb, Stays Guest. What I've listed here is some of the companies will actually lease the property from you. So you just enter into a long-term lease with, say, host A or B&B hosts. They do the short-term rental, and you can increase your yield. You can even get up to double the yield. But as you said, Moss, it's also very important to get the right type of property. Don't buy a little shack somewhere up in the hills. It's got to be within 2 to 3 kilometres from shops, facilities, easy to access, easy to secure, easy and low maintenance. So, for example, you would not buy this property in one of these locations on sale to a downsizer. They take one look at that and say, no way, it's not easy to secure, it's not easy to access, not easy to maintain. That's the sort of property you would buy. a beautiful home with very few stairs, if any at all, perfect for older people. And believe me, they will start coming into these locations in great numbers in coming years. So it's a great opportunity to get in now and secure a property and make a lot of profit.
Yeah.
Now,
what about, can I ask you one question?
Yeah.
And I'm going to throw a curveball at you, John.
Yes.
What about land banking opportunities in some of these pockets? Because considerably the land price is quite relatively cheaper in some of these locations. Does it make sense for a person to go out there buying an acreage from a really long-term perspective? Because I see a lot of people having that inclination as well.
Well, no. And the reason for that is that, and it's the same as I wouldn't recommend buying house on land package or anything like that off the plan, because all of those tend to be located well outside the main shopping centres, where the demand is greatest. And especially for older people, they're going to want to live, as I said, within 2 to 3 kilometres of the town centre. And so those sorts of opportunities do not suit this market.
Perfect. Thank you very much. Where can we find you, John? Just a very quick shout out to viewers and listeners. Where can they find you?
Okay, and if you'd like more information on what we do, you can go to our website, lindemanreports.com.au. So if you have any questions at all, you can ask me your most pressing questions about the property market. So that's the end of my talk this month, and
Amazing.
I'll look forward to doing it again.
Thank you very much, John. And for viewers and listeners, if you have any questions, comments, you can always reach out to us. And if you're local to some of these towns like Busselton or Margaret River or Victor Harbour or McLaren Well or some of these pockets that we were talking about today, do reach out to us, share your insights. What are you seeing on the local ground, news on the field? Thank you for listening to us today. Take care, stay safe, keep smiling, keep investing. This is Moxin and John checking out. Adios.